Hey, everybody. Good morning, good afternoon, good evening. Not quite an on-time start. 12:30 Riga time, 11:30 Paris, Berlin, 10:30 London. Going to go through some Bitcoin stuff, going to go through some geopolitical stuff, but let's start with Bitcoin again. Bitcoin Lab, you can find this data. You can find it on your node if you really want to code it up, but it takes a lot of effort. But the Bitcoin Lab, they have a great API source, most of it for free. We got UTXOs. All right, so these are pieces of Bitcoins. Pieces of Bitcoins. We have less than 20 million Bitcoins at the moment, mined and outstanding. And these are the pieces of those in total. Okay, UTXOs. I have short-term and long-term. Okay, the lighter colors are the short-term, green, darker are the long-term, and then of course green is in profit, red is in loss. So the difference between short-term and long-term, I think it's 155 days is the chosen length that statistically UTXOs kind of hang around if they're in unmoved more than 155 days, half a year. I showed this yesterday, but let's just see what we got. One more day's worth of data from yesterday. 96.9, now 97 million UTXOs. And you see the short term here is mostly red. Okay. Long term, still quite a bit of buffer at $60,000 Bitcoin or $65,000 Bitcoin. But this is just, in my view, completely intact cyclical Bitcoin moves. Good morning, Robert. I have not stacked today yet, but thank you for the reminder. This is about positivity, right? Bitcoin sovereignty. One of the most interesting, transparent markets the world has ever seen. It's going to continue. You just look at this chart, right? It's going to continue. Data was a bit thinner here with the short-term versus long-term UTXOs, but relative to the price movements. But this big patch of red here is short-term hodlers. Racked up losses here and then also here. All right. It's a bit weirder here in the early days, but regardless, you can see that when the majority, like here's the total now, total's 14 million, right? We were a year into the crypto winter and the price was, under $200. You can see the majority here was underwater. In fact, 5 million long-term, 5 million short-term, over 10. Total UTXOs were only 14 million. All right. Talked about it yesterday. You were at like a third here at the worst of it. A third was red. Or even more than a third, I already forgot. No, it's like 40%, something like that, probably even. 8 plus 13, 21. Yeah, closer to almost 50% even at the worst of it. Close to 50%, and then here, over a third. But the ratio goes down as the market matures, so it's not a pure number we can count on every time. But that's where we are right now. We're going to get big splotches of red here for the long and the short. There's just no doubt about it. Good morning, Satoto. Thank you. Hello, Daniel. I think we're at the levels. I'll show you the power curve in a second. Yeah, I'm sorry for that. T2 plus ACH still. Legacy system, right? But what I do think this chart shows pretty clearly is that we're opening up into big gap space, right? I mean, we just open them. We're doing it quicker than before. That's for sure. And I do, let's say, have hope that we might not have as deep red here and deep red here. We might pull out of this quicker simply because it's such a quick down. And we know what Wall Street's still stacking. So it's possible this is close to the end, but there's no way to tell until it turns around. As far as the question, Daniel, about where the bottom is, I mean, statistically, we're at it. All right, so here's for our European chart for our European friends. We're just bumping along it, setting new bottoms every day in euro terms and dollar terms on the quantile. I want to remind you guys that you will have the opportunity to look at these charts. Part of SaaSpocalypse is I'm able to do charts now. It's just incredible. I mean, it takes time still, but it's sort of become a hobby of my life now to track Bitcoin and the markets and make these charts. So I'm hoping to offer this to you all within the next 2 months for sure. Hopefully within the next month for way cheaper than anything you could get on the market. Certainly way cheaper than Bloomberg. This is where we stay calm. Statistically, we're at the bottom. Statistically. Doesn't mean we can't bounce around for a long time. All right. Another leg down, right? To people calling for 50, people calling for 40, whether dollars, whether euros. That's suspect. It's not going to break the chart or anything. I mean, it will just pull this down. It doesn't break the chart, right? We're at 96.6% R squared on Bitcoin euro. It's all right. Bitcoin's still giving you, and it can give you this, say you bought it on the way down right here in the spring of, or summer 2022 was this, where's the date? Spring into summer, right? Then went all the way down and then you held all the way till today. Still a 10% CAGR. Okay. This is going to repeat. These patterns are absolutely going to repeat. I'm 99% certain of it because this is statistically how it works. And then the other nice thing is you can see how fast this has happened now. I mean, it's not nice for short-term hodlers, I know, but relative to what was going on in the last cycle, all right, when we were here, here, right, it took a full year. And now we are, oh, sorry, what's going on here? It took a full year, right, to get sort of at the levels we are now, and we are at those levels now. And I would really take comfort in this, all right? If you're watching this stream, congratulations. This is not technical analysis. This is statistical modeling around a curve with a really good R squared. So it took a year. And it always takes a year, as everybody knows, right? And this even took longer than a year, really, from the crypto winter. But this one took a year. This one took a year. This one took 5 months. I mean, you call it start of October. So again, I don't know. This chart doesn't tell you timing, but I would say it probably is more likely than not that we don't go lower than this, but also we could even bounce back quicker because a quick down, you know, I don't even know if I can say often, but it does happen when you get quick drops, you can quickly rebound. Whereas if, you know, the prior cycles, it took a year, as we know, then it takes 3 more years to get back up into the bull, or 2.5 years, right, to get fully into the bull. While I'm on the topic, right, I know we were talking often last year about how it would just be so fun to be counting the days where we're over the 9 here. And just, you know, compare it to this cycle and just count the days and see where, you know, where we could possibly go. Obviously, it wasn't as fun, wasn't as easy like that for everybody, but Bitcoin's history is helpful in that it pretty closely rhymes, but yeah, it doesn't perfectly repeat. Another thing we can see here, remember in May 2017, we reached the lowest it was the lowest sort of level of the curve as it evolves. So as it evolved, I'll take it off. Wasn't this black line, right? It actually more looked like this gray line here. And what you can see is usually we're, you know, as Bitcoin's, nothing is a perfect R squared. So as Bitcoin was sort of booming in the early years, it was really pulling this curve up. But from about the end of 2016, we get very close to the actual all-time percentiles. But this is the lowest right here in May 2017. You can see it. And that's actually what I'm saying there is a good thing. We still have about 7 or 8 grand to fall to get to match that low. All right, it doesn't mean it can't happen. It could absolutely happen. But so far we're not at an all-time low of the curve itself. All right, so this curve of 100 20,000, 120.3 thousand euros, not dollars. I confused myself for a second. It says euros. Is not the lowest. We could fall like the dollar is 7, so it's probably like 5 grand more. The point is, statistically, this is not the lowest this trend has always been. And just to show you again, for sure to hammer out what I'm saying here. Nothing is perfect, right? This is a beautiful looking smooth curve, but this is all-time data. This is more how it looked over the power curve over time. And you'll notice it's usually higher than the black line. And we've been really pulled sort of down. But it's not a record low. That's the point. Record low is right here. Right there. So that's another indicator that, like, it's just saying where it could go. It's always possible to go lower. But it's also, I would say, positive. It's a positive sign that we still haven't hit the low. And, you know, maybe we won't this cycle. Maybe this 0 percentile will remain the lowest. If you're watching from Japan, oh no, where's the Japanese yen? I want to show that next. Here's the yen chart. Well, let me go back and extend the euro chart because it's always fun. Let's say it takes 2 years to get back to trend. End of 2027. Trend at the time is 219,000 euros, black line. If we blow above it to an all-time record, 700,000 euros, if we fall to or stay at this record low we're at right now, still 106,000 euros. Okay, so compared to 54,000 euros, this is how it grows. And there are no trading view short-term lines on charts which can show you this other than the math. Okay, if we make this log, sorry, there we go. You can see it's a nice straight line. And we're at the extreme for sure. We're at the extreme of it. Maybe we push it down a little bit more, but there's a lot of data here that draws these channels. So I would have more comfort in these bands than not. I would have a lot of comfort. I do have a lot of comfort. Show you the median as well, just so you can see it's slightly different than the OLS. Okay, so again, if we go out 2 years, the median, 200,000, 203,000. So that's 50% of the time, that's what it would be. 50% of the observations. So, very good numbers, I would say, still for the future. Goes up $100 a day, 100 euros a day, the power curve. In yen, we have not bottomed. Okay, it's interesting. We bottomed here. And just based on the nature of dollar yen, euro yen, Bitcoin yen, we are not in an all-time low state. So Bitcoin's holding off a little bit better for yen-focused hodlers than dollar and euro-focused hodlers. This remains the wildest one, in my opinion, is Bitcoin silver. just look at that curve. This is another reason why I have more confidence in the fiat curves like this, right? Let's put these back. I have more confidence these won't fall out of whack because this one is so out of whack. And I guess it's always possible that the AI revolution will turn silver into a must-have asset, commodity, industrial good, but the dollar silver chart paints a different story. So I do think that this is showing extreme overheating of silver and basically way too cheap of Bitcoin for silver bugs. Although I got to hand it to it, with Bitcoin's weakness and silver not completely getting destroyed yet. It's hanging around. That's 700 ounces of silver per Bitcoin. But very important, notice that it has found a little channel here. It has found some level of support. Will that last? I think so, but when we were back here in October, November, I was also talking about this with not as beautiful a chart, but because I hadn't had it made yet, but you just didn't know until the bottom set in. I'll show you silver, dollar. Just to drive the point home. Okay, here's silver dollar. Notice how this is different. These are both log linear, log on the left-hand axis, linear on the bottom axis. Okay, and notice that's yen, there's euro. Where are we going? We're going silver. Notice how this is a curve. All of them are curves. Log linear, that means it's a power curve. Unlike what mostly markets do is they turn into a straight line on log scale. So I would say with high confidence this is dead cat bounce territory of silver. We'll see. If it ends up being like this and silver doubles from here, congratulations to the silver bugs. That's all I can say. I'm happy for you, but there will be some activity here, some repercussions of Bitcoin being so cheap in silver terms and in gold. Sorry, that's silver. Here's Bitcoin gold. So Bitcoin gold wasn't as extreme until now, and now it is hitting lows. But like before, it was sort of hanging out. This line I think wasn't fully stretched. I think it was like maybe here or something. You have to go back. Maybe it was stretching out, but doesn't matter. It was. You can see that it wasn't as sharp as silver right there. Back at the end of January, it was sort of slowly making its way down to being, again, all-time cheap price. And this is where, again, I'm pretty confident in this call, 12.6 ounces of gold. I'm pretty confident. I mean, this could go lower, but going below this level, 10 ounces of gold for a long time to me it's got to be rock bottom. It's very hard for me to believe that gold bugs would get 9 ounce of gold Bitcoin for an extended period of time. Here's a new one, or one I haven't showed in a while. At least not in this format. So, that heading's actually confusing. Again, I got little bugs every time I look at it. This is the 10-year Treasury curve. All right, it's not the yield curve spread, but it's the green line's the 10-year Treasury, the black line's the S&P. So Trump's Liberation Day, the very weird part was right here, and specifically here. Apparently, Bessent threatened to resign, depending on how Trump was going to go here, because you had the S&P falling, and unlike, this is typical where the stock falls, but then the Treasury yield also falls, means the price goes up in bonds. It's an inverse relationship. But right here was a weird moment, particularly like up to here. You had the yield rising strongly while the market was still down. This was Trump's Liberation Day. So Trump had to back off of all his aggressive, even though it seems like he's just as crazy as it's always been. It's a 10-year yield. But a more interesting way to look at this, okay, this is more all-time view. Again, ignore that 10-year minus 3 months. It's not up yet. I'll show you in a second. But here's just the long-term 10-year yield, which is really one of the benchmark yield curves. You know, I was reading a lot about Austrian economics and trying to figure out why the markets did what they did, especially right during this period. And everybody said the bond vigilantes, you know, they're coming for the bonds, but people kept buying 10-year treasuries all the way to here. And then finally here, after the pandemic, did Powell force the 10-year higher and all bonds higher. But anyway, let's look at it now in terms of the yield curve. 10-year minus the 3-month. I'm going to put this up. Okay, and I'll take the 10-year off just for a second. But what you have now is, this is basically a snapshot of the yield curve at any point in time. So one of the most important longer-term benchmarks is the 10-year. You could do a variety of short-term. Some people do 2-year. 3-month is what I'm using here. So it's 10 years. You see 10-year minus 3-month. And so this gives you an effect of the yield curve. And so when this goes below 0, we have an inverted yield curve. When it's above 0, it's a normal yield curve. All right. It's not as much history as I'd like. I'll try to build this out more, but it more or less calls recessions, or at least flashes that recessions are on when it goes negative, okay? So you could argue about how much it actually calls it, right? But if you look at the stock market here, obviously, it was still topping, but then the yield curve starts to go negative. All right? And that, in fact, was a top. Global financial crisis. It worked again. It's not, again, it's not perfect, because this was 2006. It flashed again in 2007. And we topped. And then we go till today. The scale is weird. Anyway, here's 0. It's here. So just look at the tooltip here. Right, it did not go negative here. I remember this, but it did go negative here. Or did it not? Wait, what am I? Sorry, I was confusing myself. Let me go back and look at this again. Yeah, so this was even before, this was when the repo market seized up, and it did go negative as well. And then the craziness happened. Massive amounts of money printing, Bitcoin went up, everything went up. It's been inverted for a while, or it was inverted for a while, let's say. And the markets kept going up. But now I'm going to put the 10-year back on to show you sort of the weirdness that we've been in. So again, the fact that the 3-month was higher than the 10-year at these levels, right, was pretty wild. This was when the Silicon Valley Bank had to go bankrupt. Jason Calacanis was screaming at Twitter all weekend to be bailed out. David Sachs. We stayed negative there for a long time down here. But people that want to know, like, okay, are we going into recession? Are we not? Obviously, it's like reading tea leaves at some point. But it is interesting that we're still positive now on the yield curve, meaning that we're not inverted, at least between this sort of two main benchmarks. That is the 10-year, which is currently around 4%, and the 3-month, which is around 3.7%, because the delta is 0.3%. But it's hard to tell, obviously, because even, last year, let me take the 10-year off just so you see exactly. From last year and before, we were negative. Good morning, Oscar. Hope you're well. Just something to keep in mind. I haven't gotten a Bitcoin relevant indicator connected to this yet. It's a lot of money printing. Other interesting thing, right, is that Bitcoin has only been around during this period. So this entire period, short-term rates, which includes the 3-month, were just hugging zero all this time. And when finally they started to raise them, which they did, I should have the short term as well so you can just see where the short term rates go. We started to go negative. But if you look at this period, obviously from the 80s till the global financial crisis, you could roughly say that there are relatively long periods of normalcy in the business cycle. We can be 2, 3, 4% difference between the 10-year yield and the short-term 3-month, 2-year yield. But really, from the global financial crisis, this thing starts to be really weird, pulled more towards zero. And I don't think we're going to get away from that anytime soon. Trump has already said that he wants to pull rates down again. And then if you look at the 10-year itself, it's trying to go back to like levels like this, like relative normalcy. But I don't think they're going to let them, over the long run, let long-term rates even go that high, even though theoretically they don't control long-term rates, theoretically. There's so many variable rate mortgages and everything. I mean, to imagine that you go back to 15% on the 10-year is just, it's out of mind. But clearly, this manipulation from the 80s until now, there was nowhere to go once you got to these levels, right? During the pandemic, the 10-year was under 1%. So this is going to want to keep pushing higher, and they're going to try to keep taking the short-term rates lower. Anyway, we'll track it more. I think big picture for Bitcoin, there's going to be some red here. You're going to have to let it find a bottom. I'll put in the percentage chart as well, so it'll be, give me a second. It's going to take a second. All right. So this is all in percents, but again, I've seen a little bit of bugs with my numbers. So same chart. But as we went to, even the bottom, like the crypto winter, as it was called here, right, it's easier to see this now. I'm adding up the short term and the long term, right? They're all in percentages, except for the total. But the short term is 56, long term 30. So 86% of the UTXOs were red here in mid 2015. Late 2018, start of 2019, you were at 40, 42, 45. Late 2022, early 2023, you were at, actually you did get to the same percentage, 47, 45, 44, 45. And now, again, as a percentage, these are all percentages in the tooltip. 32. So I do think this can stretch for a little bit. I mean, I think it's possible it doesn't go as long here, especially the long-term hodlers in loss, since we fell so quick. But if past this prologue, 40% hodlers in losses is probably in play. We're only at 32. Just want to give you a little update on where I live again and how crazy it is for us still. If you know, if the Baltics and so the Nordics and the Baltics, they met in Ukraine yesterday. A lot of delegations met in Ukraine, but the Nordics and the Baltics had a big contingency press conference, met with the Ukrainians. I recommend it. Basically, Ukraine, the Nordics, which is Finland, Norway, Sweden, Denmark, Iceland, and I even got Greenland in here. And then this is us in the Baltic, 6 million, smaller than Belarus itself. But Belarus and Russia are the problem childs here, problem children. And we're much smaller. And of course, even this Ukraine number is arguable. It's depending on who's a refugee in Europe right now versus still in the borders. But these are the countries that really are going to have to stand the most together against an aggressive neighbor. This is military spending, percent of GDP. I showed this yesterday. It was a little bit wacky. I'm showing it again. Still working the bugs out. You can see Ukraine is spending 33% of its GDP on the military. If you take them out, these are more normal figures, but Russia's going to get to 10%. They probably already are at 10%, but they don't really record stuff accurately. Like they put military expenditure in the education ministry and stuff. This 2024 numbers. Poland, 4%. The US, 3.5%. Baltics and Greece, over 3%. South Korea, 2.5%, and then the rest of NATO. Japan down here, 1.4%. The new prime minister is vowed to get that higher. And if you look then on military spend, so it's the same chart that I showed before. This is how our situation looks. So if the US is going to go it alone or go focus on China, Germany and France are going to do what they do, UK, which of course we need their support, but these are the countries that are, I would say, directly most at threat, us being the primary ones, but after Ukraine. Of course, there's Moldova, Georgia, which is dealing with some stuff right now, but sorry, even that, I get all these, that's daily. This is a daily figure, by the way. Let me put it to years. Here's yearly. You see how same ratio, it's just it's like mostly all the money that we can afford is going toward Ukraine. And this is the weird thing, right? Belarus is just this completely poor vassal state of Russia. It borders the Baltics and Ukraine. And I can imagine the next step once Putin, if he does get a ceasefire, is just to militarize this country and build up a military right next to us. Anyway, that's why you need a decentralized asset. Um, sorry, too many charts. So I don't actually have a sensitivity of that, but it's probably, I mean, we can do the incremental here. So, you know, let's do it right around 100. You can see it changes, but here's a good one. So at $100,000 Bitcoin, ignore that UTXO number. It's weird. I don't know why it's. Oh, it's actually the total of the price, and yeah, it's still some bugs. Sorry, but anyway, at $100,000 Bitcoin, it would be 18, let's say 18% in loss, and then 35,000 less we have in price. We have 33% in loss, right? So I can't do math in my head, but you figure out the incremental difference. Right? $100,000 Bitcoin had 18% of UTXOs in loss. $65,000 Bitcoin has 34% hodlers in loss. Hold things equal. To get to 40, I don't know. I can't even do the math in my head, to be honest. I'd have to do the dimensional analysis. Maybe someone could do it while watching it. Hello, Pavel. Yeah, it's true. Iran is coming. AI is coming. I would like to sort of get my own indicator regarding this curve, because this, well, not this one actually, the yield curve itself, like showing the delta. We might find something here with like the change in Bitcoin price or something, but I haven't thought about it enough. But you're right. I'm more, the reason I'm sort of so confident here is, this is silver, where's gold? Too many charts, too many charts. Here we go. I think as a raw figure, this is it's a psychological number actually for gold bugs, like 10 ounces of gold. We could hit it. Absolutely, we could hit it. We could go lower. Anything is possible, but I think statistically that has to be very close to the bottom. Let me show you another one that will show sort of the evolution of that curve. So let me make it really quick. Where is... Let me show you on the dollar first. Okay, this is the one I used to show a lot. and it doesn't make as good a sense as the quantile. But I'll do it on first the dollar, and then we'll look at gold. So this is the evolving, right? This is why it looks like squiggly and weird, and then it smooths out in the future. So just to explain quickly, the reason it looks squiggly and weird in the past here is I'm ignoring this completely, and I'm just running this evolving, which you can maybe kind of see, right? So this is what the power curve was at the time, and then wherever the price was, find the multiple, and then take percentiles of that. It's more mathematically correct in a exponential chart. It's really not mathematically correct in a power chart, because power charts are not linear on log linear. So this works better for exponential charts, bottom line. In any event, you'll still get an idea. And if, I think what a lot of people are wondering is, okay, well, we're just going to keep going lower and lower and pull this power curve really low. It's possible, but if you see now I'll put the all-time back. If you see how this curve over the last 10 years has gone up, we've actually spent more time, right, pulling this way up, not way up, but pulling it up, like here, right? We just pulled it up. And of course it comes back down with the next bear. And then here we pulled it up. And here we've just been on it. So we didn't really pull it up much. So I just have a hard time statistically thinking that we're going to spend a lot of time under for those reasons. Like, I can understand pulling this thing down if we've really pulled it up, right? If we've really made these rainbow bands go up, then I can understand pulling it back down. But we haven't done that. So that's my thinking about what's happening here, and why I actually think this curve is pretty sound, right, as it is. Let's look at it now in gold. It'll be maybe a little bit more interesting. Hold on one second. Wait, that's not what I want. Sorry for the dead time. 1 second. Why does that say linear? Coming back to you guys. 1 second. All right, I got some bug there. I can't show you gold with this. Working the bugs out still. But in any event, this is enough on the idea. Okay, so here's the quantile of gold, Bitcoin gold, and here's the evolving percentile. Terms that get confusing, I know, but the squiggly line history of Bitcoin dollar. And I would argue that this is still pretty strong. All right, so looks weirder on log here, but just because of the nature of it. But let's try to zoom in. That's a bug too, that's not actually showing, but in any event, the curve is, I think it's holding nicely. And until we really hit a low here, I wouldn't suspect it to, I mean, where the curve itself projects the lowest value it's ever projected, which, like I said, we have about $7,000 to spare. The power curve is $130,000. So the low would be if the power curve turns itself into $123,000. And keep in mind, the power curve goes up, even at these prices, $100 a day. So these are the things that we're fighting right now with this chart. Anyway, that might be a mouthful. Yep. Thank you, Oscar. That's basically, sounds right to me. 40% of the UTXOs will be underwater at 50K. Be good to chart that marginal change, actually. Let me write that down. You know, one can also argue at this level of interest in this asset, like, this is in yen now, Japanese yen. Maybe it slows down, right? It's totally possible that this stays low for extended period of time, doesn't bounce back. I think the hype and just the nature, the liquidity, the velocity of the Bitcoin market is so much more, at least to us, right? It's more interesting than the gold market. It's more transparent. Seems less likely to me that this trend kind of settles down. Plus, if you look at other assets, you know, like the Turkish lira priced in Bitcoin or something, they're doing much better, relatively speaking, than we are, priced in dollars or euros. I don't want to do a completely, you know, apologetic uh, sort of view of Bitcoin always here, but like, let's just look at the gold and silver. It is possible this is a 1 in 500-year move that silver is making, but still, if we go out to 2050, this is how the entire curve looks like. So even if we stay at these levels and go all the way to 2050, that's $200 gold. See that? Q100. .8% CAGR still is what silver paints. I could be wrong, but if I had to guess, we're in dead cat bounce phase of silver. It took 4 months, so maybe you know, we'll see. But maybe it's too early to call a dead cat bounce, but you know, this is just typical top behavior. And I just love that we have this, right? Like, this is something you could never see for the gold market. And you can see a very definite increase of the darker, right? Whether it's in loss or in profit, the share rises of long-term hodlers. To where they're 88% of the pie. Only 2/3 in 2017 top. It's hard to believe that 2017 tops nearly 10 years ago. I'm glad that I wasn't too euphoric in the fall, that we'd bounce back or whatever. It just didn't feel good to me. But this feels better. I mean, this feels, this just looks normal. I don't know. What do you guys think? Price prediction wise. Here's the end of 2026. Looking at a very nice straight line log chart. The 0th percentile here is 74K. That's wild. Euros. I pulled it back. That is another feature of the power curve that probably I should talk more about, is even though it grows slower, the dollar increase becomes larger. And that's the same thing that for an exponential curve, it's actually stronger with an exponential curve, but usually, unless you're hyperinflating, exponential curves don't last that long. I mean, they'll last longer at lower compound rates. But since we're still at a 40% compounding growth of this power curve, back here, let's just do it yearly. We can just do it manually, right? From 2017, forget the actual. Look at the, let me show you exactly what I'm looking at. Let's even look at the evolving. Okay, so things were really wobbly here. Okay, but from about 2016, this looks pretty close to a straight line. Okay, so all right, top of 2017, top of 2017, the power curve itself was $2.9 thousand. Right, we were way over it. 2.9 thousand. Let's go to the end of that year, the next year, end of 2018, and round numbers. 6.3. All right, you that have been following this long enough know where I'm going. That went up $3,500. The curve itself, of course, the price went way down during that year, but the curve itself went up $3,500. Now, I need to stick the extender out, but let's look at what the curve itself is or was by the end of last year in euros. 113,000 euros. 113,000 euros. Now, presuming we stay relatively on this curve, by the end of the year, the curve is up 40,000 euros, $50,000. 114, 158, 45. $45. So basically, $10, it's 10x, which is actually another feature of the curve entirely. 10 years will do 10x. It will do 2x every 2 years, but every 50%, 50% its length, it will do 10x. That's what it is. So back here, I'm doing the math now in my head, which is never safe, but anyway, we can just describe what it was. From 2017, the growth of the power curve, right, was only 3.5K a year. I did that right? 2.8. $3.5K. So in less than 10 years, the growth of the power curve over the scale of a year is more than 10x what it was. I need to chart that one out as well, just to show you guys clearly, so I'm not like doing it all in my head, but you need to write that down. All this stuff is going to hold, in my opinion. On the margin, of course, anything can happen, but it's hard for me to unsee this chart. You know, what's interesting, basically, bottom line is we're at the sort of strangest drop, because here, okay, you can maybe justify going down to the bottom if we've been at the top. You can justify kind of going down to let's even put the 10th back, because that makes more sense. If you've been at the top, you can justify bouncing along here. If you've been at the top, you can justify. If you've been at the top, justify. Been at almost the top, you can justify. Here, we are just on the curve. So this is, in my opinion, and not really my opinion, I think it's a fact, this is like the least justifiable move. And yet here we are. Now, when I use the word justifiable, it doesn't mean that, we can't stay on this low level for longer, but it seems like it could bounce back quicker. Anyway, I think you guys know the drill. Hodling is the safest bet as it is. And again, if past this prologue, getting to something like 40% hodlers, or as Oscar mentioned, maybe another 15K drop in price. It's always possible to signify sort of a true bottom. But even getting to that low, I would say, there's nothing necessarily scientific about it. Like, we have way more long-term UTXOs. Yes, these two did line up, but they were way higher than this one. There's no reason to say that this has to line up with these two, but the pattern is familiar, and I think we're gonna stay lower for longer. Might not be as long as these, but lower for a little bit longer. All right, guys. Any other questions? Anything else to look at? In the curve, we trust. Don't trust verify, but you can verify these numbers yourself. 80% of the time, prices in these levels. Let's go out to year end 2027 as I close the video. There are your figures for European denominated hodlers. All right, everybody. That's going to be it for me today. Thanks for watching. Slava Ukraine. See you tomorrow.